Did you know that only 3% of actively managed U.S. equity funds outperformed passively managed index funds over the last 15 years? Today, you will learn about 3 index funds that you should hold for life. Stick around till the end, as I will leave you with an index funds cheat sheet for free that has some twists and tricks. Welcome back to Smart with Money, where we empower you to be smart with money. Make sure to like, subscribe, and hit that bell button so you won't miss out on any of our videos on personal finance and investment. Index funds are a type of mutual fund or ETF that track a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. Index funds are a good investment for long-term investors because they are low-cost, diversified, and passive. When choosing an index fund, there are 2 important things to look at. 1. Expense ratio. This is basically the cost of the fund. They can eat away the performance, so try to keep this as low as possible. 2. Minimum investment amount. Often mutual funds have a higher minimum investment amount, whereas ETFs don't. This can be important for some of you. Without further ado, let's jump right in the 3 index funds you should hold for life. Fund 1, Fidelity 500 Index ETF, FXAIX. The Fidelity 500 Index ETF, FXAIX, tracks the S&P 500 Index, which is a basket of 500 large-cap U.S. stocks. The S&P 500 Index is one of the most popular and well-known market indices in the world. FXAIX has a minimum investment of $10 and an expense ratio of 0.02%. This means that for every $10,000 you invest in FXAIX, you will pay $2 in fees per year. FXAIX is a good investment for long-term investors because it is a low-cost, diversified way to invest in the U.S. stock market. Fund 2, Fidelity U.S. Dividend ETF, FDVV. The Fidelity U.S. Dividend ETF, FDVV, invests in U.S. companies that have a history of paying dividends. FDVV has a minimum investment of $10 and an expense ratio of 0.08%. This means that for every $10,000 you invest in FDVV, you will pay $8 in fees per year. FDVV is a good investment for long-term investors because it provides a way to generate income from their investments. Dividends are typically paid out on a quarterly basis, so investors can receive a regular stream of income from their investment in FDVV. FDVV is also a good investment for investors who are retired, who are approaching retirement, or who want to create wealth with dividend investing. Fund 3, Fidelity Global Equity ETF, FGILX. The Fidelity Global Equity ETF, FGILX, invests in stocks from all over the world. This includes stocks from the United States, Europe, Asia, and emerging markets. FGILX has a minimum investment of $10 and an expense ratio of 0.08%. This means that for every $10,000 you invest in FGILX, you will pay $8 in fees per year. FGILX is a good investment for long-term investors because it provides a way to diversify their investments across different countries and regions. This diversification into different geographical areas can help to reduce risk and improve returns over the long term. So, here we have it, the 3 index funds that you can hold for life. These funds are all low-cost, diversified, and passive. They also provide a way to invest in different asset classes, such as U.S. stocks, international stocks, and dividend stocks. Index funds should be part of your portfolio, as it ensures diversification at a very low cost. As mentioned in the beginning, remember that passive investment funds almost always outperform active investment funds. If you want to learn more about index funds that have a bit of a twist, check out the link in the description, where I give away an index funds cheat sheet for free. You will also have a look into the index funds to see what they hold in more detail. Don't miss it. I hope this video has been helpful. If you have any questions, please leave them in the comments below. And be sure to subscribe to my channel for more videos about personal finance and investing.